You typed a question. Maybe it was a recipe, a cover letter, a bedtime story for your kid. Something so small, so ordinary that you didn't give it a second thought. You hit enter, and somewhere, hundreds, maybe thousands of miles away, a warehouse the size of 40 football fields shuddered to life. Cooling systems the scale of small factories kicked in. Water, thousands of gallons of it, began to evaporate, and the power draw spiked briefly across an entire regional grid, all because you asked an AI a question. One ChatGPT query consumes roughly 10 times the electricity of a standard Google search. Goldman Sachs estimates that by 2030, AI data centers could consume more electricity than the entire nation of Japan. And right now, 3 companies, OpenAI, Google, and Anthropic, are in an arms race that is quietly, systematically reshaping the planet's energy infrastructure. This is not a technology story. This is a money story, an infrastructure story, a story about promises made in boardrooms and the carbon reality left behind. Welcome to the Autopsy of Money. To understand what's happening, you need to understand the machine behind the machine. When the internet first scaled in the late 1990s and early 2000s, data centers were expensive, energy-hungry, and largely invisible to the public. The industry treated power consumption as an operational cost, a dirty secret buried in annual reports under the sanitized heading of infrastructure investment. Then cloud computing arrived, then streaming, then cryptocurrency. Each wave pushed the energy appetite of the sector higher, but nothing compares to what generative AI has done. Here's the fundamental problem. Traditional software, a Google search, a spreadsheet calculation, a streaming video, runs on pre-written code. It executes a defined instruction set and stops. The energy cost is real, but it is bounded. Generative AI is different. When you send a message to Claude, ChatGPT, or Gemini, you are not retrieving a cached answer. You are triggering what the industry calls an inference, a live, mathematically intensive process where billions of parameters inside a neural network interact simultaneously to construct a response, token by token, word by word. The compute required to do this is orders of magnitude greater than anything the consumer internet has previously demanded at scale. And the scale is breathtaking. ChatGPT alone reportedly handles over 100 million active users. Gemini is embedded across Google's entire product suite: Search, Gmail, Workspace, serving billions of interactions daily. Claude, Anthropic's model, is integrated into enterprise pipelines touching industries from legal to healthcare. Every one of those interactions costs energy, and energy in 2024 and beyond still largely means carbon. The International Energy Agency reported that global data center electricity consumption already exceeded 460 terawatt-hours annually before generative AI hit mainstream adoption. Their updated projections, accounting for AI growth, suggest that figure could double or more by the end of the decade. But electricity is only half the story. There is another resource being consumed, one even more precious than power. One that cannot simply be generated at scale with a new reactor or a solar farm. Water, training. A single large AI model can consume over 700,000 liters of clean water. Not to power it, not to build it, just to keep it cool enough to think. And the models you're using today, they've already been trained. What you're seeing now, this water bill, is just the beginning. Here is where the story stops being abstract and starts being financial. Because the environmental cost of AI is not an accident or an oversight. It is a deliberate, fully funded, strategically executed bet. One of the largest capital allocation decisions in the history of the technology sector. Microsoft committed to spending $500 billion on AI infrastructure through a program called Stargate, a joint venture with OpenAI and SoftBank that plans to build data centers across the United States at a pace and scale that the American power grid was not designed to accommodate. Google announced over $100 billion in capital expenditure for 2025 alone, a figure that, in context, exceeds the GDP of several European nations. The majority is infrastructure, data centers, power. Cooling. Meta committed 50 to 65 billion for the same year. Amazon Web Services, which powers a significant portion of the AI inference market as a back-end provider, has its own multi-hundred-billion-dollar infrastructure roadmap stretching to the end of the decade. These are not R&D budgets. These are infrastructure budgets. They are commitments to physical assets: land, steel, concrete, copper, coolant systems that will draw power for 20 to 30 years. And here's the critical financial dynamic that most coverage misses entirely. Data centers of this scale cannot simply plug into an existing power grid. They require what the industry calls co-location power. Either they build near existing generation capacity, or they become the economic justification for building new generation capacity themselves. What big tech discovered, quietly, gradually, then all at once, is that their AI ambitions require them to become energy companies. Microsoft struck a deal to restart Unit 1 of the 3 Mile Island nuclear plant in Pennsylvania, the same 3 Mile Island, the one that partially melted down in 1979, rebranded, refurbished, and brought back online specifically to power Microsoft's AI infrastructure. Google signed power purchase agreements with nuclear developers and advanced geothermal companies. Amazon purchased a nuclear-powered data campus outright. Meta began exploring small modular reactors. The AI race did not just drive up energy demand. It triggered a wholesale reinvention of how Silicon Valley thinks about power supply. But here is the problem with all of this clean energy optimism. And it is a serious, financially material problem. The timelines do not align. New nuclear plants, SMRs, geothermal infrastructure, these take 5 to 15 years to build and license. The data centers being commissioned today will be operational in 12 to 18 months, and they will need power from day one, which means the gap, the years between when demand arrives and when clean generation is ready, gets filled with whatever is available. The gap between big tech's clean energy promises and their actual power draw right now is being filled with natural gas, with coal in some markets, with whatever the grid has available. The question isn't whether they intend to go green. The question is what they're burning while they get there. Before we follow this story to its conclusion, if you're finding this investigation valuable, subscribe now. Every week, the Autopsy of Money dissects the financial stories hiding inside the headlines everyone else is missing. Hit subscribe and ring the bell so you never miss a breakdown. Now, let's talk about what the carbon numbers actually look like and what's waiting downstream. In 2020, Google declared itself carbon neutral, historically. The company claimed it had offset every gram of carbon it had ever emitted. It was celebrated, lauded, held up as the gold standard of the corporate climate responsibility. In 2024, Google quietly disclosed that its greenhouse gas emissions had increased by 48% over 5 years. Not decreased, increased nearly 50%. The reason cited in their own environmental report: the increase in data center energy consumption and supply chain emissions associated with AI investment. They did not bury it, they disclosed it. Because legally, they had to. Microsoft tells a similar story. The company pledged to be carbon negative by 2030, meaning it would remove more carbon than it emits. In 2024, its emissions had risen 30% compared to its 2020 baseline. Water consumption at its data centers had surged 34% in a single year. The water issue deserves its own moment. Data centers use water in two distinct ways: directly, in cooling towers that evaporate millions of gallons to manage server heat, and indirectly, through thermoelectric power plants that generate the electricity they consume, which themselves use water as coolant. A 2023 University of California, Riverside study estimated that training GPT-3 alone consumed approximately 700,000 liters of fresh water. That's before a single user ever typed a question. Inference, the ongoing use of AI, adds to that total continuously. Every day, every query, every answer. And this is happening in places that cannot afford it. Data centers cluster in specific geographies. Northern Virginia, which now hosts the densest concentration of data center infrastructure on Earth, Arizona's desert corridors, water-stressed regions of the American Southwest, parts of Ireland and the Netherlands already pushing the limits of their grid capacity. In Goodyear, Arizona, a city already managing water scarcity in the Sonoran Desert, Google's data center complex applied for water rights that local municipalities publicly contested. The story barely registered nationally. These are not hypothetical future harms. They are present tense. The companies building this infrastructure are not hiding it. They're disclosing it in their own reports. The question is whether anyone is reading those reports closely enough to hold them accountable, and whether the financial markets have correctly priced what comes next. Because if they haven't, there is a reckoning coming. This is not a story where the villain is obvious, because the villain, if there is one, is speed itself. The technology being built has genuine utility. The economic incentives driving this investment are rational within the systems that created them. And several of the companies involved are making real, costly bets on clean energy infrastructure that will eventually matter. But the gap between pledge and present remains vast. And the financial markets, which are now pricing AI infrastructure stocks at historic multiples, have largely ignored the regulatory, resource, and reputational risk embedded in that gap. Water rights litigation is rising. European regulators have begun restricting data center construction in water-stressed zones. U.S. grid operators are issuing public warnings about the strain AI demand is placing on regional infrastructure. These are not distant risks. They are materializing now. The next time you type a question into an AI, and you will because the utility is real and the convenience is extraordinary, just know what sits behind that answer. Not a villain, not a conspiracy, but a set of choices made at speed, at scale, with consequences we are only beginning to account for. If this investigation opened your eyes, subscribe to the Autopsy of Money and share this video with someone who uses AI daily without knowing the cost. And leave us a comment below. We want to hear from you. Should AI companies be legally required to offset the environmental cost of every query? Or is this simply the price of progress? But before you go, the environmental bill is only half the story. $500 billion has already been poured into the AI boom. What happens if it doesn't pay off? That investigation is on your screen now.